All right, well, seems like deja vu. We had a day like today, like we did just 2 sessions ago on Friday. Volatility jumped up, oil spiked up along with it because of Middle East concerns, and the market pulled back hard today, giving back pretty much everything it got yesterday in the bounce that we had at the start of the week. So let's break down what this risk off move means today and how it's a little different than what we saw on Friday. If you want the full trade idea and the deeper analysis, watch the full video at now@marketscholars.com, our full market outlook blog post. The link to that is in the description down below, as well as in the pinned comment down below. All right, the S&P 500, you can see, ended up dropping about 1%, almost a full percent, like I said, giving back almost everything it gained in the bounce here yesterday. As volatility exploded higher again. Here's the VIX. You can see the big jump back in the VIX here, back above. In this case, it's moving average. But you can see a strong move here. We've been having a little bit of a run in volatility up to the upside. You can see the trend has just kind of been bullish here. We've had an upward swing post options expiration in May, and then we're just grinding to the downside before really the last week. We've gone from, where did we close here? At 16 and a half, a little bit, just under 16 on just a week ago today, before now moving up to 21. So pretty significant move higher. Obviously, we know why. What's going on in the Middle East? It's impacting the S&P. It's impacting crude oil. You can see crude oil bouncing back up here today to, what do we finish at, 73, 74, with a very strong move. A lot of volatility on an index that's, or at least on the crude here, that's pretty much gone parabolic over the past 2 weeks. This has been one of the stronger runs that crude oil has had. In this case, over 26 days. We had a run of 26% over 26 days, so a pretty good run. And like I said, the S&P 500 is pulling back, not significantly, right? Not significantly, but enough of a drop that bring that momentum line back down again, and in this case produce essentially another bullish intermediate confirmation signal to the upside. If you find these daily recaps helpful, go ahead and hit that like button. It helps more traders discover the video. You can also share it down below. If you're new here, consider subscribing so you don't miss tomorrow's breakdown. All right, what we see here today is really a classic risk-off day. In fact, there was really only one sector that rebounded, or that did well, that outperformed, that gained on the day today. In fact, energy at one point in time was up more than 1.5%. Ended up finishing still up 1%, the rest of the market down. Everything was down. So whether it was discretionary and healthcare, which were down the most, about doubling the losses of the S&P 500. But then you can see, like, okay, the technology and communication services, they were down, as you would expect, when they typically lead the market in either direction. But then you can see materials, industrials, financials, the other kind of cyclical area of the market outside of energy, all underperformed. And then utilities and staples, and we saw healthcare down there, and real estate, and they also lagged the markets today. So it really was kind of this kind of risk off. You can see that showing up as well in the breadth. The breadth indicators has been really weak. So we've been losing new highs. Our new highs on the market have dropped down. You can see here, let's go to the new highs index. They dropped back down to relatively low levels. So we're getting kind of narrow leadership. We're getting a rotation into other areas in the market, into an area of the market we don't really want that rotation, and we're getting weak breadth. So we've been so bullish for so long, it's hard to maintain without some kind of rotation. And we've been seeing a gradual rotation towards safety, but now it's, over the last few days, been clearly towards a sector that traditionally does not necessarily lead a bullish market. So this could have ultimately evolved into something more than just a couple days of decline. You can see I'm really kind of watching the 17-day exponential moving average very closely, especially with the MACD below its moving average. And, in other words, the MACD histogram has been red for multiple weeks now. And we've been just grinding up to the upside with the point of control near the top of the chart. It's kind of a classic like exhaustion move going into a significant resistance. So where could that lead us? So that's kind of what I break down in the full market outlook video. We also take a look at a trade idea today, a trade that we have done before in the past. We actually had one on the exact same trade on the exact same stock for the June expiration. It's about to expire. Worked out just great. So we still like this setup, and we did it for July. But given the potential for some weakness here in today's trade idea, we took a different approach than how we did for June, and we looked at how we might be able to protect against a downside move while still maintaining the original trade idea and the opportunities that provides. The full playback for today, I've got the complete trade setup, technical breakdowns, and what I'm watching next ready for you right now. Just head to marketscholars.com, join the foundation tier. It's only $29 a month. Don't wait. Today's full market outlook video is already up, and you'll want to catch it before the market opens tomorrow and be able to get the trade idea that we discuss day in and day out before the market closes in our Market Outlook Live. Thanks for watching, everybody. Have a great rest of your Tuesday night, and we'll see you all next time.